everybody, welcome to the online interview of Meet the Expert. Our guest today is Christopher Herr, Chief Investment Office of Lodgis Hospitality. Welcome to the Meet the Expert, Chris.
Thank you, Mauro. Glad to be here.
Lodgis is an hotel investment platform formed through the joint venture between Worldport Pincus and Vina Capital, with headquarters in Singapore. Lodgis will focus on Southeast Asia. Currently, they own in Vietnam properties such as Metropolitan Hanoi, Hotel Grand, and the whole Fusion Group, but they also have exposure in Thailand, in Cambodia, through the Raffles Group. So Chris, hopefully today will take us through a bit of his opinion into the market, as well as the Lodgis strategy for next year. Okay, so thank you very much, Christopher. I'll start with the first question into what are you guys up to in Singapore and here, how your team is doing and how your property are doing.
Yeah, thanks, Mauro. I don't think we're going to be any different than a lot of other hotel owners, frankly, maybe across the world. Our portfolio is taking a severe dislocation and weakness. Frankly, occupancies range anywhere from 0% and in good cases, maybe up to 30%. So what we've had to do as a group is, from an asset perspective, look at each hotel and really ask ourselves, do we keep them open or closed? And in some cases, you lose less money by closing them, so which is unfortunate, but the reality of the times. A lot of cost-cutting measures, both at the property level, but also the corporate level. So that's furloughs, pay reductions, unpaid leave, frankly, some cases, layoffs in the bigger picture, but kind of really managing the cost side. From a more corporate perspective, managing our capital, and that has kind of a few different legs to it. One is our existing loans on our properties, rescheduling those with the banks to hopefully increase the runway. Same kind of thing with our corporate facility. On the other piece of it is the equity capital side, and working with our shareholders to work to try to bring in some new equity funding. And the third is kind of related to the cost side, but a different realm, is we've effectively put on hold all our major our investment ROI projects across our business. So really, overall, just managing our capital and our balance sheet. Actively engaging with our team members and employees, keeping everybody try to stay. You know, we're all working from home. This is my home office in Singapore. Obviously, not ideal when you're trying to help run a hotel company, but it's the new reality. So we're talking with our employees, and then actively engaging with our owners and partners. And in the case, obviously, we own the Fusion brand, and we have 6-7 owners there that we're continuing to engage with and understand their pains, because we're kind of going through it on our end. So a lot of different things. None of it all fun, not all of it fun, but it is what we're trying to do to effectively kind of hunker down and buy ourselves some time, so that on the other side of this, we can become stronger.
Excellent, excellent. And see that you guys have a clear path into the way. So looking into the future and the recovery, everybody wants to know what's going to happen and what is the expert opinion into that. Give us your opinion, please.
Sure. My opinion, and it's obviously just an opinion because nobody really knows, and the letters of V, U, and L are often used, and kind of using your direction there. I think it's somewhere between a V to a U, highly dependent on where you are in the world, and then you drill down further, what city you're in, what type of asset are you talking about. So really it depends. I think Vietnam is very well positioned. I'm not just saying that because it's a bit self-serving, but it overall, from a virus containment and management perspective, has done great. You're in the office, I'm at home. So Singapore versus Vietnam, clearly there's a difference there. So I think that's great as long as that holds. It had great fundamentals going into this, and I think a lot of those things are the same. The great industrial boom, and I think that's only going to be furthered by global risk of China versus everybody else in this pandemic issues. And I think Vietnam's going to definitely be a strong benefit. It always had the nice beaches going into this. It's going to have them coming out of it. And then the other thing is, China and Korea, one of the two big markets for us, are coming back, online. And so I think all of those things really bode well. The government seems very organized. They're pushing the banks to work with the various stakeholders. So I'm quite positive on Vietnam, and it's not going to be all V. Like, we clearly see Hanoi at a different risk level than Ho Chi Minh City, than a Da Nang. And so it's really going to be kind of almost area by area, right? Breaking it down. There are some parts of the world, and maybe even some parts of our region, that feel like it's going to be much of a bigger U. But I do think in the case of Vietnam, it's going to be that kind of, hopefully that more shorter term recovery going into next year.
Great, Chris. Thank you very much. So as you discuss about all this good position that Vietnam is holding against the peer market, against other, then let's take it to opportunity. So assets that will come on the market available to buy, or new development opportunity, or developers that actually are slowing down construction and therefore will allow others to be faster. So Vietnam, or if you like, even neighbor country, 2021, what opportunity do you see coming?
So I kind of look at it on a couple of different lenses, right? Number one, people are like, well, is this going to change forever, hospitality? And my personal opinion is no. I'm a firm believer that hospitality as a consumer product is here, and it's here to stay. And that tangible experience of going to a beach in Vietnam, or to a sushi restaurant in Tokyo, or to Eiffel Tower, or to Rome. Again, different cities will have their own kind of recovery pace, but that fundamental desire for everybody to travel and experience hospitality, I don't think will go away. So with that backdrop, I think opportunities-wise, asset deals are going to take some time to work out. Right now, you have government, central banks, big private banks doing everything they can to help out their various stakeholders through this kind of near-term period. And owners like us and a lot of others are going to hold on to their assets and portfolio the best they can. The reality is, though, the weaker players will be exposed and not be able to hang on, and therefore the opportunities kind of come up. So what I'm trying to say is I kind of see it as a progression. Right now, you see a lot of opportunity in the public markets. You don't have to be very bright to see that, if a stock was at 100 and now it's down to 30 or 40 in that case, it looks like a great deal. So right now, it's kind of more of a public market opportunity, because that's the thing that can react the fastest, right? Seeing more debt opportunities. So these are different owners, different developers who are cash strapped or have some liquidity issues, and so there's some debt investment opportunities. Asset opportunities, not so much. Here and there, intermediaries like Savills and others, I think, are trying to be proactive to try to create them. But again, getting back to my earlier point, I think those asset owners will have some time, and the question will be, with the liquidity issues plus a huge drop in performance, will they be able to hang on? That period will probably, in my view, take at least 4 or 6 months to kind of play out. And then maybe after that, you start to see some interesting things come to the horizon. In my view, I think this is a good opportunity for flight to quality. So we were, before this period of time, looking at a lot of development deals, and maybe some of the more up and coming beachfront destinations in Vietnam. I think we'll continue to keep an eye on that, but this is a great time to now focus on maybe some of the more tier 1 city assets, existing assets, that you couldn't even get close to pricing realistically prior to this crisis. So our view, or what I would pitch to our team, would be to really focus on quality assets coming out of this, quality companies that have some assets that, hospitality may be non-core to them, and realize they don't want to be hotel owners anymore. And that relates, I think, to Vietnam as well as across Asia.
Exactly. I think you cover up just out of curiosity. If you look at Vietnam, Cambodia, and Thailand, do you think that because opportunity will also come in Thailand and probably in other countries, will the people shift attention to that instead of Vietnam, or Vietnam will always be a kind of a darling of investors?
Yeah, listen, I think there, if we go before this COVID period, there were investors that, you know, were very bullish on Thailand and not necessarily so present in Vietnam. So I don't think it's one or the other. Again, it kind of depends on the type of investor you are. Each one of those countries both have positives and some drawbacks that investors and others will have to take into consideration. I think Vietnam, for a lot of things we already mentioned here, have some great fundamentals. You know, Thailand had this huge supply overhang, and that's something I didn't bring up earlier, is that, again, there will be a lot of projects across the region that developers and the like will drop. And therefore, you know, that kind of huge supply or that supply threat, I think, will lessen as a result. Again, each country is going to kind of come out of this a little bit differently. And across all those three that you mentioned, I think there definitely will be opportunities. And we'll just have to be wait and monitor and definitely be patient. I think we're focusing, as I said, right now on our balance sheet and our capital to make sure that up and down the stack that we're strong and can withstand this current shock. And then coming out of it, you know, look at these different markets accordingly. But I definitely can't emphasize more. I think that flight to quality and really looking to see if we can get some assets that we were unable to get previously would be a good use of our energies.
Thank you very much, Chris. Always great to talk to you. Always very informative kind of talk. I hope a lot of people will get a lot of good idea and even positive view on the hospitality of the future. So thank you again for coming with us, and hopefully I'll see you in Ho Chi Minh City in the next few months when
Sure.
the file will start to be reopened. Thank you, Chris.
Sure. All right. Thank you, Mauro. Take care.